Here are 3 stocks I'm buying in April. I'm terrible at timing the market, but I've still managed to beat the S&P 500 since I started investing in college. Here's how. I don't wait for the perfect entry. I just look for businesses with strong foundations, bright futures, reasonable valuations, and I let time do the work. Here's the problem most investors have right now. The headlines are scary, so they're either waiting or they're selling. But no one knows what's going to happen, and it's next to impossible to get the timing right every time. So here are 3 names I like in April. Microsoft is trading at one of the cheapest valuations in a decade. Meanwhile, its cloud and AI division are growing faster than most companies in the S&P 500. Almost every major enterprise runs on Microsoft, and switching means a lot of time, money, and operational risk. With bad headlines baked in, any shift in the narrative can mean outsized upside. Meta is reaccelerating growth while generating cash most companies will never even make. Half of the world uses one of their products, meaning new monetization efforts have insane scalability potential. AI also actively strengthens their ad business rather than threatening it. They're also trading at a discounted valuation relative to the growth they've demonstrated and the dominance of their business, Amazon. I went over it in this video, but basically it has startup level growth across multiple business lines while operating the largest business in the world and has infrastructure that no competitor can replicate. Even with the recent run-up, it's arguably still trading at a discounted valuation. The biggest risk facing these 3 names is AI capex spending, and quite frankly, I don't think it's really a risk. If AI is not nearly as profitable and these companies cut back on spending, you're left with the most dominant and insanely profitable companies the world has ever seen that have suddenly become flush with cash and are trading at even cheaper valuations than today. Take Meta in 2022, for example. Fears of reckless spending came to reality, they cut back on spending, and suddenly the company is printing free cash flow and the market loves them again. Follow for more insights. See you in the next one. Bye.